Here is a detailed summary of the Synopsys 2025 Q3 earnings call transcript, focusing on key financial metrics, management forecasts, risks, and significant statements. Synopsys 2025 Q3 earnings call summary. Good afternoon, everyone. Today, we're reviewing Synopsys' third quarter of fiscal year 2025, a quarter marked by a transformational milestone: the successful acquisition of ANSYS. Key financial metrics. Q3 FY 2025 revenue. Synopsys reported $1.74 billion in revenue, a 14% increase year over year. This includes approximately 2 weeks of ANSYS financials. Non-GAAP EPS. Non-GAAP earnings per share stood at $3.39. Non-GAAP operating margin. The non-GAAP operating margin was 38.5%. Backlog. The company's backlog reached $10.1 billion, including ANSYS, demonstrating business resilience. Free cash flow. Free cash flow for the quarter was approximately $632 million. Cash and investments. Synopsys ended the quarter with $2.6 billion in cash and short-term investments. Debt. Total debt stood at $14.3 billion. Impacts on Q3 performance. The quarter's results were notably impacted by underperformance in the IP, intellectual property, business. This was attributed to 3 primary factors. 1. New export restrictions in China. These restrictions disrupted design starts and compounded existing weakness in the Chinese market. 2. Challenges at a major foundry customer. This customer-specific issue had a sizable impact on the year. 3. Internal roadmap and resource decisions. Certain strategic choices regarding product roadmaps and resource allocation did not yield the expected results. These headwinds in the IP segment were partially offset by strong growth in the design automation segment and the successful closing of the ANSYS acquisition. Management's forecasts and future outlook. Synopsys is taking a more cautious view for Q4 FY 2025 due to the ongoing external headwinds. However, the company still anticipates delivering a record revenue year. Full year FY 2025 guidance update. Revenue: $7.03 billion to $7.00 billion. Non-GAAP EPS: $12.76 to $12.80 per share. Free cash flow: approximately $950 million, revised downwards due to lower revenue and interest impact. Q4 FY 2025 guidance. Revenue: $2.23 billion to $2.26 billion. Non-GAAP EPS: $2.76 to $2.80 per share. Looking ahead, management expects a transitional and muted year in IP for FY 2026. More detailed color on FY 2026 components will be provided in December. Significant risk factors. Geopolitical environment. The ongoing challenging geopolitical landscape, particularly export restrictions affecting China, continues to be a significant factor. Customer-specific issues. Challenges with major foundry customers can have a material impact. IP business transition. The shift in the IP business model towards more customization and subsystems requires strategic adjustments and may present short-term headwinds. Integration of ANSYS. While positive, the full integration of ANSYS, including navigating final regulatory approvals for divestitures, presents ongoing work. Economic downturns. Subdued demand in certain markets, like industrial and automotive, could persist. Highlights of the quarter. ANSYS acquisition closed, a monumental achievement, transforming Synopsys into the global leader in engineering solutions from silicon to systems. Strong design automation growth. Revenue in this segment was up 23% year over year, driven by robust hardware performance in emulation and prototyping solutions for AI workloads. EDA resiliency. the EDA business continues to demonstrate strength and leadership in next-generation chip design. Synopsys.ai GenAI capabilities. Approximately 20 customers are piloting Synopsys.ai GenAI capabilities, highlighting the company's leadership in AI for engineering workflows. Multi-die momentum. Continued success in enabling multi-die tape-outs for leading AI semiconductor companies. ANSYS simulation and analysis. This segment, forming the largest part of the ANSYS acquisition, performed in line with expectations, with releases like ANSYS 2025 R2 enhancing AI-driven simulation. Portfolio diversification. The ANSYS acquisition significantly diversifies Synopsys' portfolio and customer base. Lowlights of the quarter. IP business underperformance. The 8% year-over-year decline in design IP revenue due to the previously mentioned headwinds. Headcount reduction. A strategic decision to reduce global headcount by approximately 10% by the end of fiscal year 2026 to drive scale and efficiency. Delayed divestitures. The integration of ANSYS is being elongated due to delays in obtaining final regulatory approval for the buyers of the Optical Solutions Group and PowerArtist business. Lowered FY 2025 free cash flow guidance. This reflects lower revenue expectations and interest impacts related to the ANSYS acquisition financing. Most important statements from management. Sassine Ghazi, President and CEO, on the ANSYS acquisition. Q3 was a transformational milestone quarter for Synopsys. We closed the ANSYS acquisition, expanding our revenue, our customer base, and our long-term opportunity. With ANSYS, we are now the leader in engineering solutions from silicon to systems. On IP headwinds. Our results were primarily impacted by underperformance in the IP business, as we had the expectation of deals that did not materialize, driven largely by new export restrictions in China, challenges at a major foundry customer, and certain roadmap and resource decisions. On future strategy. We are actively pivoting our IP resources and roadmap towards the highest growth opportunities. We believe we have de-risked our forecast, knowing that transformation takes time and the external headwinds I cited will continue. On AI's impact. AI continues to drive unprecedented investment in infrastructure and R&D. Demand for high-performance computing and AI applications continues. The increasing complexity, cost, and time-to-market pressure of designing and delivering AI-powered systems is a trend that persists across industries and underpins our opportunity. On transformation and efficiency. Synopsys transformation continues. Specifically, we are conducting a strategic portfolio review and will be taking actions to focus our investments and our execution on the highest growth opportunities. We expect to undertake related actions starting soon that will reduce our global headcount roughly 10% by the end of fiscal year 2026. Sheila Glazer, CFO, on financial performance. Q3 revenue came in at $1.74 billion, non-GAAP operating margin at 38.5%, and non-GAAP EPS at $3.39. Backlog came in at $10.1 billion, including ANSYS, underscoring the resilience of our business. On IP impact. Our results were impacted by the underperformance in the IP business due to the headwinds Sassine outlined. Tailwinds from a strong quarter in our design automation segment and the close of the ANSYS acquisition partially offset these headwinds. On guidance revision. In light of these headwinds and tailwinds, we are taking a conservative view on Q4 and updating our full year 2025 targets for revenue, operating margin, EPS, and free cash flow. On long-term margin commitment. Our commitment to the long-term margin in the mid-40s is still intact. So our short-term headwinds that we're managing through are really short-term headwinds. But there's no change in our long-term commitment. On ANSYS integration and synergies. With the ANSYS acquisition now closed, we remain confident in achieving the committed synergies of the merger. This is despite the delay in completing the follow-on divestitures. In conclusion, Synopsys is navigating a period of significant transformation with the integration of ANSYS, while simultaneously addressing specific challenges in its IP business. The company remains focused on its silicon-to-system strategy, leveraging AI, and driving long-term growth and efficiency.